So how to recession-proof your business? Let's just dive right in. So about me, I've met many of you at this point in time. We have a lot of clients here. We have a lot of people that we've met recently at a conference we were at. So you've probably already seen this crap before. I'm Eric Cruz. I'm the founder and CEO. I'm a lifelong entrepreneur and business consultant. I've literally not really worked for anybody since I was 20 some years old. I'd be a terrible employee right now. I am the owner of Cruz & Co., formerly Cruz Consulting Group, and also the current CEO of a real company called CE Painting, which is a pretty fast-growing commercial painting business. We do large buildings. We're basically a project management for large buildings for general contractors. So I live in this market, and if you can go through this presentation and think about me, that's not a small business. We have a lot of employees. We do a tremendous amount of business. We actually had, I think, about 570-ish on the Inc. 5000 a couple of years ago, and it's commercial painting. So if you think consulting business generally does pretty well in a recession, commercial painting, yeah, if you're worried, guess what? So am I. And I have my quarterly meeting for that company tomorrow. So I'm in the soup with all of you. I'm the previous owner of Collegiate Entrepreneurs Painting Company. I sold it last year. We teach college kids how to run painting businesses for the summer. We had over 11,000 employees during the time that I owned it. I owned it for about 20 years. That company actually kills it in a recession, but I sold it just in time to not take advantage of that. So I'm thankful for the current owner for that one. I was also an EOS implementer for 8 years. I worked with a tremendous amount of clients, many of which were here with me in the early days. Thank you very much for that. We currently work with 100 plus companies in the consulting company that are all trying to scale up. All of our companies pretty much fit the same personality, which is companies that are trying to scale, companies that are going for it, and companies like, honestly, that are kind of like we are. Okay, this is Steve. Steve's here. He's the good-looking guy in the polo shirt. He's living in Florida right now. He was probably a lot happier last week than he is this week. He's Chief Financial Officer. He's our CFO of the consulting company. He's also the president of our finance company. We do have a separate finance company of CFOs, controllers, and bookkeepers. If you need help with any of this stuff, we're here to help you. This is not really run by the finance company. It's kind of run by the consulting company and the finance company today. But Steve does run that. He's going to be tag teaming in, chiming in wherever he can. He's been the senior leader on 3 companies with successful exits, including one of them was a longtime past Cruz client. So I worked with Steve for many years. He's been a CFO for 25 plus years and also a COO. So he has crossed that line, as you see a lot of good CFOs do, and has successfully raised over $1 billion in bank financing for small and mid-sized companies. So not to bombard Steve's email, but I will tell you, of all the CFOs I've ever worked with, he is the best at getting capital for small and mid-sized businesses. There you go, Steve. You're about to get bombarded. But he is phenomenal at it. He's very, very good.
Thank you, Eric. I appreciate it.
Well, thank you for our large line. Okay, so about us, Cruz & Co., we just rebranded. Our mission is to help entrepreneurs, all of you, and your teams, all of your teammates. So if you're a teammate, if you're the owner of the business, doesn't matter, we're here for you. We really work for owners and their teams, live their ideal lives. Our niche, we help entrepreneurs increase their revenue, profitability, and valuation of their companies. We're really big into making sure your valuation is strong, but we're also big on revenue and profitability. Our target market, typically we're starting with companies that we start with them when they're under $50 million. Typically, we do have multiple, including some on this line right now, that are well into the hundreds of millions of dollars. The principles don't change much, but our target market where we focus all our efforts are on the sub $50 million company who want to scale. We have 3 value prop items. System, we have an operating system. It's similar to an EOS or a scaling up. I'll give some credit to those systems. We have an operating system called the growth method. We are accountable for our clients' results. We measure client success on a monthly and quarterly basis to make sure they're winning. If you're a client of ours, we are watching your numbers and making sure you're successful. And we try and provide as many resources as we can to make sure you're successful along that journey, whether that's recruiting or M&A services or finance or content. We are a content person here, Kristen, she's awesome. Whatever the offering is, we try and make sure you have the best resources available to you as you scale. So system accountability and resources. Let's dive in. Now, before I forget, as my team always reminds me that I do, I forget that we are a help first company, meaning that You could work with us for a long time and we never charge you a penny. It's true. So we do want to make sure that we get the offer out to help you. If you're hear all this and you think, I really need some help, I need an outside voice and I'm not a client, send an email to marketing@cruiseandco.com. We will go through your P&L with you to identify all your risks and opportunities. And I promise you, we will not try and sell you anything. I was a volunteer for a long time before I did any of this. And that's still the mentality we approach the market. So if you want help and you're going through this and you're like, I don't have a leadership team that's big enough, or I don't have a consultant, we will help you, no cost. Okay, so fortunately, I have all the answers about whether we're in a recession or not. Steve has the ones I don't have. We can tell you when it's going to end, pretty much tell you how to invest all your money. We're just not going to do it today. So that actually does cost money. So this is the free version of the webinar. Hopefully this is also valuable to you. So this is a little more guesswork. That was a joke. I know you're all on mute, but you get at least fake laughter. All right. So are we in a recession? Well, certainly the politicians are going to tell you we're not, depending on what side of the aisle you're on. But there's recessions we're going to stick to facts today. We're not going to give theories really because we don't know. There's only so much we can do. So our goal today is to help you navigate uncertainty, because that great quote, only thing we're certain about is uncertainty. That's correct. So we're going to give you the facts and data that we see and then tell you how we adapt to them. So we can control. We can't control if we're in a recession, how long it lasts, but we can control helping you get through it. And we do it, by the way, everything you're seeing, we do this in real time right now with our clients, every single slide you see. So what's a recession? Let's bring it into pragmatic facts. A recession is a significant, widespread, and prolonged downturn in economic activity. Big difference from a depression, by the way. If you watch the news, they always try and scare you. A recession is just that. It's a recession in growth. It does not mean we're going down the toilet. As much as that may sell toilet paper, it does not mean that. The technical definition of recession is 2 consecutive quarters of decline in GDP. That is considered a recession. That's been the definition since day one. People are telling us they're not in recession right now. I don't understand the definition they're using, but I suppose there's also a subjective definition somewhere out there. But it is 2 consecutive quarters of decline in GDP. That is the definition of a recession. Recessions typically produce declines in economic outlook, consumer demand, and employment. I'm not going to go too much into the Fed today because there's not a lot we can do to control that part of it. But what I will tell you is that recessions are signs that the consumer demand is dropping. Other symptoms of it include inflation, housing market downturns, general receding and recession in profits and revenue. That's the symptoms of it. So what I will tell you that you can watch the news and see is well, I'm going to keep going. I'm going to give you something that we've seen and noticed in our clients, which is an interesting thing. And it's going to make you chuckle if you're a client, because you're going to see how we're contributing to all this in just a minute. So here's some facts. 86% of CEOs expect recession in the next 12 months. This is from a publication called The Hill. 86% of CEOs are expecting a recession in the next 12 months. So whether we're in one or not, let's put that aside. That's the expected that's the expectation for the market. Now that matters because these CEOs are not only expecting it, they're also partially driving it. 73% of CEOs believe a recession will disrupt anticipated growth. 71% predict it will impact company earnings by at least up to 10% or more. Now look at that statement. For all of you who think the sky is falling, and I can't say whether it will or whether it won't, 71% predict it will impact company earnings by 10%. Company earnings by 10% dropping is not a good thing. Obviously, we don't want that. But if you take your EBITDA for this year, your profit, and you knock off 10%, that's what they're expecting. Is it the end of the world? Definitely not. So if you're a sky is falling person, this is what they're expecting, a 10% dip in earnings. So it means no growth, 10% dip in earnings. We're trying not to participate in that, but that's what CEOs are thinking. All right, so here are the actual facts around the economy. These are pulled from economic data. Q1 GDP decreased 1.6%. And cliffhanger, ready? Now, if you believe the actual definition in the dictionary of a recession, Q2, we decreased by 0.9%. I believe Q3 is predicted to be, I saw the estimate this morning of 0.6%, but that's an estimate only. That's 3 quarters in a row of decline. Okay, so call it what you want. The economy is receding. Whether it's a recession or not is a different story. Some industries are already being affected. And I want to make sure, I'm going to bring this into brass tacks in a few minutes, but here's what's actually happening out there. In tech, we have layoffs right now at companies like Netflix, Robinhood, Peloton. Peloton could be a different story, Noom. And there are hiring freezes and many others, including many of our larger clients. Okay, so when you start to go into recession, the language changes from let's hire to what's called a hiring freeze. So in a hiring freeze, what they're doing is they're actually restricting the company because they're letting people quit, especially in larger companies. People are always quitting for whatever reason, and they're not backfilling. So that's why there's a hiring freeze. So most companies that are larger in these spaces are in a hiring freeze or in layoffs. Retail, reduced demand right now is leading to excess inventory. Amazon had the smallest growth quarter this quarter in 20 years, but it did grow. To be clear, once again, sky's falling, people. It did grow. It's the smallest growth quarter in 20 years, which is not a good sign, but it did grow. Real estate, rising interest rates are expected to cool the housing market. Now, for some of you, I know we have a lot of CFOs here. For some of you who don't understand what the Fed is doing, basically, in a nutshell, the Fed is trying to cool inflation. So how do you cool inflation? You raise interest rates. Why does raising interest rates cool inflation? Because it affects things like commercial. So they're going to cool off commercial construction. They're going to cool off the housing market. They're going to cool off lending. And by doing that, it's going to decrease employment. They're trying to cut employment by 1%, I believe is the most recent number that I've seen. And that will then decrease inflation. That's how it works. That's why they're doing it. So all this stuff you see, why are interest rates going up? They're going to keep raising interest rates until inflation stops. Now, here's the funny fact I was mentioning earlier. So people ask me, they're like, how do you think we're doing for economy? How do you think the economy is? My answer is this. 75% of our clients right now, including the clients I was with yesterday, one of which is here right now, 75% of our clients are still raising prices, still. So my answer is, I imagine we're going to probably keep going into a recession until my clients start telling me they're going to stop raising prices. And that's not happening right now. So the Fed's not stupid. They're watching this saying, well, that's got to stop. We eventually have to stop that. So if you're sitting there thinking, well, I'm still raising prices, that's because either you're not living in reality, which is possible, or the American economy is not caught up to the fact that we're actually going to start to recede. And the Fed is trying to say, you got to calm down with this. So they're raising interest rates to do it. They will continue to raise interest rates. So this is not a stock picking seminar, but there's going to be some values out there, and there already are. All right. By failing to prepare, you are preparing to fail. You've heard that before. Don't let this be you. We can't control what I just went through. I do want you to understand that those are the facts that I gave you. You can believe what you want to believe. And then one last fact I'll give you, then we'll talk about what to do about this. I just got back from a conference of 600 plus entrepreneurs from all over the United States in Virginia Beach. Great seeing some of you there. The general thought from the many entrepreneurs I spoke to at that conference was they think we're going to be in a recession for about 2 years-ish. 2 years to 27 months is the general thinking. Optimism is, however, also is pretty high, a little higher than I'd like it to be, honestly, based on what I'm seeing. But optimism is high, and most people will tell you this could be a lighter recession than many. So we are preparing for 2+ years with our clients. That's specifically what we've chosen to shoot for. We want to make sure they prepare for a specific period of about 2 years to 27 months. Beyond that, I mean, who knows? Hopefully it's shorter. Hopefully it's never or not longer. But that's what we're preparing for. That's the time frame we're using. Okay, so I want to make sure you can leave here today with just a few key takeaways. And one is, how do we think about this? So when we go work with our clients, we think about this in 3 ways. So right now, I almost beg you, so some of you, I know you're working larger businesses. I work with some of you in larger business. You are hopefully already doing this. If you're in a smaller business, you need to start doing this, regardless of what your brain tells you. We recommend a 3-step thought process. One is you got to learn what your reality is, and you got to live in it. Now, what does that mean? So I'm going to go into that more in a minute, but you got to start looking around at your competitors. So the clients you're working with right now, the first thing is they say is, we're going to be fine. Next question I ask is, who are your competitors? How'd they do in the last recession? I'm a consultant. Google's our best friend. That's why we look so smart. Just Google it. You want to know how your business is typically fares in the economy? Google, how did my industry do in 2008? It'll tell you. So there's your data. So 2008 was not a long recession, but it was a tough one. And before that, I think we had 94, I believe was one before that. And then I think it was 78 before that. Those are the big ones. They're all different recessions. This one kind of looks like 78-ish in terms of inflation. But you got to live in reality what your business does. So you need to learn, how does my business behave in a recession? Because you're not going to control that. It is what it is. I can tell you right now in our business, consulting companies generally go up. They generally go up. But there's also ways they go up and there's ways they go down. And we are very conscious of those things. We've written it down. We understand what we're facing. We think we're generally up, but we also generally know how we're going to go up and where we might go down. Commercial painting company, I know that space quite well. We will go down. Now, when I say the business will go down, I want to be clear on this because I'm not a doom and gloomer. It doesn't mean our business is necessarily going to shrink. It means that the available business that we can go after is now smaller. So in our commercial painting company, this is for anybody who is affected like this, the availability of business out there for us is smaller. It doesn't mean you're going to shrink. It means that you're going to have to be wilier, better, outperforming, potentially more aggressive, definitely smarter than your competition if you want to stay flat or increase in a receding environment. So don't give yourself a crutch and say, well, I dropped 20% because it's a recession. I know we have some mortgage people on here. God love you. I have some mortgage clients too. I'd give you a hug if I could. Your world's a little tougher. I have some big tech clients as well. Their world's a little tougher as well, but we can't make excuses. Our job is to do great even when the economy is receding. So there's going to be less business for me in the commercial painting company. There's less business out there. We are adjusting our strategy right now to be more aggressive and do different things so that we can grow our company during the recession. But we are very keen on watching our pipeline. We know exactly how it dries out. We know exactly what causes it. And in our part, we're expecting our company will either be flat or will slightly grow for the next 2 years. Now, if you work for me, please forget that because tomorrow's a quarterly meeting. So we're going to grow our damn company. So no excuses. But you got to learn your reality and you got to live in it. So that's what's learn what's affecting your business and stop with the opinions, please. I've heard so many of you say, I think we're going to be fine, Eric. That's about as useful as nothing. Do your homework, learn what your reality is, and then own it. You're the CEO, you're the senior leader, you got to own the reality. Step 2 is to create and act on a plan for scaling down. You got to protect your business. That's why the optimism is not useful right now. This is not a useful place for optimism in step 2. And this is why a lot of entrepreneurs get crushed in a down economy. As Joe said earlier, you get crushed in a down economy because you think you're going to be fine. The people that don't think they're going to be fine, they're smart, end up doing fine. The ones that think they're going to be fine, get crushed. So we want you to have and act on a plan for scaling down. Take your emotions out of it. If you're a client of ours, trust me, your emotions on this are not relevant to us. We care that you have a plan for protecting your business if the economy struggles and goes down for the next couple of years, like we think it might. And by the way, that protecting your business could then lead to step 3. And here's the fun part. That's my fun moves. Create and act on a plan for scaling up. Seize the opportunities. There are always opportunities in down markets. Always. Always. We have a plan in each of our companies for seizing the down market because there are tremendous opportunities out there in down markets. Tremendous. We'll talk about what some of those are in a minute and how to get your thought in your head around those things. You need to do all 3 of these things. If you don't do number 1, you can't do number 2 and number 3. If you don't do number 2, you're open up for vulnerability and exposure. And if you don't do number 3, you can't have fun and potentially seize this environment, and your competitors will seize the environment. You could have tremendous opportunity out of this situation right now. Do 1, 2, and 3. You'll come out of this stronger than when you went in. Let's break those down into brass tacks. So what does recession preparation actually mean? Let's go to step 1 first. What is your reality? We've already been through some of this stuff. Research the landscape. How does my industry do in recession historically? Cannot tell you how many times I've Googled all of your industries in the last 6 months. Know what your industry does historically. And then you got to ask yourself, so what's our plan? So if you know what your industry does historically, everybody has different opinions. Every business is different. There are some businesses that just say, I just want to stay flat, Eric. Okay, great. Let's talk about what that means. There are some companies that say, I want to lean in and push. I want to grow. There are some companies that say, I'm actually okay chilling out for a while. Believe it or not, there are companies that say, it's a 2-year wave. I'm going to ride it. I might shrink a little bit. I'm not going to kill myself. I've made a lot of money. I'm going to make sure we're all happy. I'll cut some expenses, or I won't. I'll just lose money. All of those are your options. You just need to figure out what your objective is through the recession. How much losses can you sustain? So you want to take a calm approach. How many losses can you sustain? Just do business as usual. Big companies will do that. Do you want to try and grow and pivot? Or do you want to stay flat? But you got to think about that because you can control any of those outcomes. You just got to kind of have a strategy for what are we trying to do here. So do you want to keep growing? Or we want to stay flat? We want to cut our losses and survive? What do we want this thing to feel like? You'd be surprised how different those answers to people. And I believe people should have their own answers. If they're tired and they're pooped, they're like, screw it. I lived through 98. I'm just going to let it go and see how it goes. That's your choice. Or do you want to pivot to take advantage of new opportunities? We'll talk about that means more specifically in just a minute. So one, what is your reality? Grab hold on to that. Take a look at it. Think about your next couple of years and think, what do I want to do in the next couple of years? Just as a macro, where do I see myself? Am I going to push? Am I going to try and grow? Am I going to be okay being flat? Do I want to take a nap? Do I want to keep some of my earnings and keep my employees happy and be chill? You just got to kind of figure that out. And the reason for that is the next slide. So let's look at steps 2 and 3. So we have a recession planning tool, like all of our tools, the simplest, stupid, basic tool ever. But it gets you thinking about the key questions you should be asking yourself right now. So what are those key questions? So you live in your reality. You know where your business is. You know what the potential opportunity is for you. You know what the industry typically does in a recession. Here's what you got to do. This can be anywhere from an hour to 2 hours. We'll probably do it within a quarterly if we have time. And we think if we really are worried about your company, we definitely do this. If we think you're doing this on your own already, as some of you are, we don't. But if you're doing this on your own, if you're not a client, or if you're working with us and we're not doing this with you because we think you're okay, the first thing you need to do is gather your leadership team together for 1 to 2 hours. This should not be negotiable. It's the biggest economic thing going on right now is the potential recession. Please don't do business as usual. Please be strategic and get your leadership team together so you can actually deal with the situation. On a whiteboard, flip chart, or spreadsheet, create 5 columns. Column 1. That should be worst, I think. Typo, sorry. Worst case scenario. I'm going to show you a chart. We're going to do it in a minute. I'm going to have Steve participate in this in a minute and start shouting some things out. And any of you, we're going to run it quickly. The first column is worst case scenario. The second column is our plan to address it. Simple spreadsheet. We do it on flip charts. So we have some consultants in the room too. Worst case scenario is the top of one flip chart. Next to that is a column that says our plan to address this issue. Next to that, we assign ownership, next steps, and dates. So we vet them. We say, okay, which of these plans is worth acting on? And what are the dates we're going to actually do it? Okay, so we assign ownership, next steps, and dates. We don't want a bunch of hot air. All right, by the way, this is if you have done this exercise, it is a tremendous amount of fun. Almost every company we've done this with is changing their business, not just because they're worried about worst case scenario, but this exercise is forcing them to then say, are there other things we should just be doing anyway as a business that we aren't? So it's amazing what this has brought out, what this exercise brings out. The next column is potential opportunities. I'll show you what it looks like in a second, but it's pretty stupid and easy. And then assign ownership, next steps, and dates. You put those 5 columns on a flip chart or whiteboard or whatever you're going to use. We just do a participative. I send these out in advance. I say, I want you to think about this and bring this to the meeting. What's the worst case scenario? What's our plan to address that? Who's going to own making sure we do this? Do we have any trigger dates right now? Okay, negativity and planning, protection over. Now, we're covered for the worst case. What's the best case? That's when the fun comes up. I think we can buy our competitors. I'll go through the list in a second. What are these opportunities? Let's assign ownership, next steps, and dates or triggers. That's it. You need to do this exercise if you haven't already done it. Do it. Okay. By the way, if you're not a client, once again, this is supposed to be for our clients. So Hopefully the rest of you are getting something out of this. Clients, definitely do this if we haven't done it with you. Worst case scenario. So the obvious, it starts with a revenue loss. Once again, you want to plan so this doesn't happen to you. Our commercial painting company is going to just have a meeting tomorrow. We're going to strive for 25% growth next year. Believe it or not, that's our actual plan, 25% growth next year. But we're preparing for revenue loss or revenue stagnation. So usually when it comes to that worst case scenario, a consultant will tell you to plan for a worst case of 40% revenue drop. That's extreme. I'm not a soothsayer, but that seems extreme for this recession. We don't know, but definitely plan for 20 to 30% decline. It could happen, and you might be sitting there thinking that's not possible. I'm 52 years old. I've lived through 3 recessions. I'm telling you, it's possible. The S&P fell 50% in the last recession. Okay, so don't kid yourself, young entrepreneurs. So you typically want to plan for 20, 30% decrease. I'm gonna give you some tactics of what you can do exactly in just a few minutes. Think about what is most at risk in your business. There's a lot. This could be clients who are high-paying clients. It could be, there's a lot of things. But just what's most at risk in your business? What are you going to do to respond? That's all part of the planning. I'm going to go through these quickly. Pay cuts, layoffs, expense cutting. I'm going to get this whole thing done and then let's look at it for a second. So that worst case scenario, revenue could drop. We could lose key accounts. We could have a big drop in our overhead. In our top line revenue. We could lose those key accounts. We could have parts of our business really suffer. We're going to have that actually in parts of our business that are really going to suffer. So we write those things down. And then how do we respond to those things? So it's very micro. Pay cuts, layoffs, expense cutting. What do we want to do? This is the negative side of things. This scenario will start to inform what you're really trying to do. Do you think you can grow? Do you think you can stay flat? Do you think you can shrink? And you're going to find out, and I'm going to say this, and some of you are going to chuckle because you know it to be a fact. In my opinion, one of the best things to happen to most, big qualifier, terrible thing for society, great thing for small business was COVID. COVID was an incredible opportunity for small business. Why? Because the government gave an unbelievable amount of money away. I cannot even believe it to this day. I'm still knocking on wood. I can't even believe it. They gave an unbelievable amount of money to small business, who they typically treat a little rough. And we got an opportunity to shed, in my opinion, 15% of people that shouldn't have worked for any of you in the first place. They just shouldn't have. Like, I'm your consultant. I know that. They were the ones that you said, well, maybe we should have, maybe we shouldn't. Oh, COVID came. Yep, definitely shouldn't have that person. So you cleaned up your business. You trimmed fat. You trimmed expenses you didn't think you needed. I would recommend you should live your business that way anyway, no matter how you're doing, to trim the fat. But right now, I would start looking for the fat to be trimmed. Okay. In our commercial painting business, I'm going to hold that thought. I have some specifics around this, but I want you to think about if our business shrinks 5%, 10%, 15%, 20%, what do the corresponding cuts look like? Because now you have a plan. By the way, we're not going to accept that shrinkage, but we're going to be prepared if it happens. Steve, you got anything to add to that list that you're seeing out there with our clients?
Yeah, I've got a couple of things. So in terms of how do you respond? So those are mostly expense cutting measures. Some of the other things that I'll just add a couple. One would be look at your financing. What's your credit line? Do you have a credit line? If you have term debt, can you refinance it, stretch it out so it's less cash flow going out? Make sure your AR is collectible. Keep a close eye on large customers. Make sure they're doing okay and they're going to pay you. Productivity is kind of something that you can look at too. Can you put two people down to one job? Can you merge a job? Are there ways to deliver your products or services more efficiently? Those are all things you can do to get more profitable and get leaner. You can also look at your vendors. Are there opportunities to stretch out payments to your vendors, get better terms, get new vendors? So those are just some additional items that I could add that you might start looking at.
Yeah. So that goes into what do we do about this phase? And that's all of that. If you do not already have a credit line and you have a decent looking balance sheet, get a credit line right now. Just get it. Okay. You need to do it. Get as much financing as you possibly can right now. I realize you don't have to use it, and I know the rates are going up, but if you haven't already done it, just get it, because it's going to be tougher likely in another year from now. Okay, so just put on that flip chart all the worst case scenarios. All right. Any other worst case scenarios that anybody in the group can think of? I'll show you the chart in a second, but it's real stupid, simple, basic. Is there any other worst case scenarios anybody else can think of? We're pretty good at thinking of worst case scenarios. We're consultants. Okay. All right. Let's start going into opportunities. Every recession is going to have winners. Every recession. Some of them, sometimes the winning is just reducing fat. As Steve said, getting more efficient with your team, getting rid of, bringing in automation. Automation is going to be a big player out of this, in my opinion. AI is going to be a big winner out of this deal. So this is the stuff you can start thinking about if you aren't responding out of fear. So we want to make sure, the reason we do the fear first, not because we're negative, because we're actually the opposite. We want you to crush it. We want to get the fear covered. Because if you're covered, and even though you may cry, you say, that's horrible, Eric. I don't want that to happen. Well, I don't want it to happen either, but it's covered now. It's covered. Got a plan. Now we can have fun. So now that you have that fear taken care of, we're going to go into the fun land. What can you do? Well, 75% or more of your competitors are not sitting around strategizing about what to do in this economy. They're watching TV and watching their business decline, which means there's opportunity for acquisition. And that is for all of you, by the way, even you mortgage people in there. Hint, hint. This is the time when everybody around you, the strong people right now, this is a time to work with people that are not going to be as strategic as you're about to be, businesses that are not going to be as strong. And you want to be a helper. I believe in being a helper. It's one of our biggest values. But sometimes helping, this is a time to help to your advantage also. This is a time to find competitors, find spaces, find people who are not faring as well as you, that you have not thought it through, and do those acquisitions because they're about to be discounted.
Can I just add one thing to that? If you're going to go that route, which is, I agree, is a good route to look at, you need to plan for it. So you should talk to your bank in advance. You should look into the SBA 7A program, which some banks will work with you on, and make sure you have a law firm that you can work with on acquisitions too. So there's a little bit of planning involved, but it's well worth it if you do that planning.
Yep, I love it. A lot of you are talking about buying in the stock market. My advice to clients is always the same. Before you invest a lot of money in the stock market, which I do believe in, we did a wealth management thing earlier. I totally believe in it. I also invest in the stock market monthly. But before you invest all your money in the stock market, ask your own business first. What can I invest in for my business? Because things I typically might buy are going to be at a discount. So new business lines, what can we start? The commercial business tomorrow, this will be a topic for us. Should we pivot into different customer segments? You want to be careful. I will say this, because the recession is not going to be long-lived, even if it's 2 years. I mean, especially for us old folks, it's not that long. So you want to be careful not to pivot your business reactionarily someplace where you come out of the recession and you lost your original business. But you do want to look to see if there's lines you can expand into that might be great during this time. So in the commercial business tomorrow, we'll be asking ourselves, should we go down market? Should we go down? We do a lot of very big projects. We're now asking ourselves, should we go down market? Is it a big change for us to do projects that are sub $50,000? What does that look like? How about direct to customer for us? We work with a lot of general contractors. How does the direct to customer market look for us? Where is the government putting money? Where are they putting money? Infrastructure. Tons. Google that. Where's the government putting money? You know how many people will make money because they know where the government's putting money right now? A lot. So learn where the government's putting money. We're looking into that right now. Do we want to do any public work? Do we want to do any sealed bid work? This is stuff we would not have entertained in the world of the fat and happy, where we've been for years. So we got to really ask ourselves, are there any new business areas we want to go into? So ask yourself that question. Different messaging. A lot of you are on this right now, thankfully. Many of you are providing a service that is either fractional or a replacement of in-house. If you're anything like that, if most B2B companies are something like that, pivot that messaging to be an opportunity for people to reduce their expenses on their P&L. Make sure that you are perceived as a company that can do that. And remember that some industries do extremely well during recession. There's a list of those. Healthcare, there's like 4 or 5 of them. Healthcare, restaurants tend to do well for the most part. Education companies tend to kill it. Consulting companies, fractional finance tends to kill it. So Steve, we better make sure we at least ride the trend. So think of if industry kills it, but think inside your industry, are there any parts in my industry or any clients in my industry that are going to kill it? Go to them. And then there's other things you can, of course, do that are kind of tangential to your business. This is a good time to likely buy real estate in 6 months to a year. You ever want to buy a building? Maybe not today, maybe a year. People say, well, interest rates are so high. Yeah, but you can probably refinance in 5 years and the market's going to go down right now. What you know is you can buy low and keep an asset. You also know that at some point you can refinance your loan. So think about, if you're a long-term business player, don't let recession rates scare you away. Be smart, but the asset's what you care about. The interest rate you can refi later. Okay, so and then there's this scenario of what we think will happen. I'm going to go through this slide very quickly because this tends to be this is where most of you actually live, either before this webinar or maybe just in general, hopefully not afterwards. You live in this slightly rosier picture. The company's impacted, but it's okay. How do you respond from here? Consider all the same cost-cutting measures. Maybe they're necessary, maybe they're not to a lesser degree. How does the scenario impact your objective? The only reason I'm showing you all that stuff is I just want you to see that this is how a lot of you think. And if you kind of look at it like, I don't think I'm going to be that bad off, then if you are rosy, you're still going to have to do this. And maybe this is actually where you end up. But we found if you want to end up in this slightly rosier picture, you don't end up by thinking this way. You end up by preparing for the absolute worst, and then planning and trying to crush it so you can be the absolute best. So if you want to actually live this slide, you're going to have to do the other 2 slides first. All right, now I just want to take a brief pause for a second. We have about 16 minutes left, and I want to show you this. This is just, once again, very basic. This is what that flip chart looks like. Whiteboard, Excel spreadsheet, bring everybody to the room, have them bring their ideas and write those down. What's the worst case scenario? What's our plan to address it? What are the next steps and dates and who owns it? Opportunities, same thing. What's our plan to address it? What are the next steps? What are the dates? It's like a SWOT analysis, but it's tempered for the current economic times. So that's just what it looks like. If you were all clients, I would say an action item out of this is to do this with your leadership team in the next 30 days, ideally. Some of these may turn into objectives, key results, or rocks if you're using a different system, where they can become next steps you want to act on quickly. Guarantee you do this exercise with your team, and your team will leave with not only some recession things, but some things that you can do in the short term with your business, regardless of the recession. Okay, now I want to bring all this into our last 15 minutes of brass tacks of what to do with that information. You've learned the 3 steps. You're living in reality. You're planning for a downturn. You protected your company. You've also got exciting plans of how you can maximize and do stuff to crush your competitors even during this time. You then went through and did the exercise. You planned everything tactically and specifically for the worst, and you planned it for the best. There's more you got to do. It's the last thing you got to do. You got to do this. This helps me sleep at night because I worry about all of you constantly. You got to work with your finance department to make sure this becomes reality. Okay. Ultimately, the recession is all about dollars. And while a reset, to me, money is only a small part of life. We got to make sure we watch dollars. So what should you do specifically with your finance department? Okay. Oops, sorry. 1, your brainstorming session needs to be validated by projections and data. So now we want to bring this into brass tacks. I want you to use a 2-year time projection. 2 years is going to keep you safe. You want to go 27 months, that's fine. Oops. What happened here? Hold on. Hold on. Somehow I lost the slide. Oh, there we go. Okay. Work with the finance sales function to reforecast revenue and offer the C guidance. Quick modeling of what if scenarios. Now, I want you to look at a budget, find opportunities to cut cost. You've got to do this. Steve is phenomenal at this. 2-3% savings is meaningful. Do it line by line. Don't be lazy. You want extra credit? Once you've gone line by line and cut, do a zero up accounting. That's always fascinating. By zero up, what we mean to say is, let's pretend you started the business today. What would you actually need? This is depressing for a lot of people. It is for me too. Then look at your business and see what you're actually spending that's different from what you would actually did if you started from zero. There's often a huge delta of expenses that you've accumulated in your company. It's almost demoralizing. You're like, how do we get all this fat? Because you tell yourself you need stuff and you need stuff and you need stuff and you accumulate. So it's really a two-phase exercise. One is line by line, cutting from what you got. And that's kind of what I call table stakes. You got to do that. The second part of this is, well, let's pretend we didn't have this chart. What do we actually need? And then build bottom up. Steve said it. Find ways to become more liquid. Refinancing debt. Expanding lines of credit. Whatever you can possibly do. Expect a 2-year time frame. More brass tacks here. We'd like you to put together a 2-year monthly budget for 2 years out. Ideally, at this point of the year, 2.5 years out, 2 years and 3 months. Go to 2024 on this thing. If you don't already have it, go to 2024. I know some of you already have it because I've seen it. You have to have at least two. One that takes a worst case scenario into account, and one that I would just call the actual budget itself, which does not take worst case scenario into account. It takes really what we're planning into account. Okay, so we will be planning for probably, we're doing our budgeting right now, probably for a 10 to 15% increase when it comes to our actual finances and our commercial business. It's aggressive, but that's our actual plan. And we're going to have a budget for that, as well as probably a 20% downturn. And I'll tell you how we do that in just a second. We then incorporate cash into that. This is protection. We incorporate cash. Okay, so if you've heard nothing else in this, this is like the Air Cruise of the Cruise Consulting. Cruise and Co. Kristen's slapping me virtually right now. Of the Cruise and Co. Way, and that's trigger events. So I'm a huge believer in planning out trigger events, both up and down. So trigger events are decreases in revenue by X%, losing key clients. That's the negative side. The upside is increased revenue, increased number of clients, and trigger events usually are, if you're a service business, you're looking at people. And unfortunately, we have a trigger plan in our commercial painting company that is just down. It's very clinical, that if we fall below certain margins, we have I know this is terrible. I know this is terrible. We don't have anybody here that works for us here. We have pretty much mapped out our plan for how we make cuts the whole way down to 30%. It's terrible. I know it's terrible. It makes us feel terrible, but we're covered. We have figured out how to scale down. We could scale our company almost 60% down and be okay. Now you might think, well, that's horrible. Not for us. We already planned for it. It may not be time to be loaded, but I got a plan. And by the way, some of you are down 50% or more right now. So I'm not kidding about this. So you got a plan for going down. So we have planned way down. We've done it with people. We've done it with expenses. So you got to figure the trigger events. What do we do if we drop 10%? What do we do if we drop 15%? And you got to plan, and you got to do all that in advance. I fortunately have a wonderful partner, and we've been working together for 20 years, and we've lived through 3 really bad events. So we learned that this is all non-negotiable to us. Same thing now for what you're striving to do. So we're still pushing clients for 20%-ish growth rate. If you brought all of our clients in the room, most of them would say, what recession? We're still pushing up. I hope that's what we're saying even in the thick of this thing. I hope our clients are saying that. So we are still going into meetings, and I have meetings with 5 of you in the next 2 weeks. We're still going into meetings and saying, what are we doing? Oh, we're going to shrink Eric recession. Bullshit. I'm not going to tolerate that. We are pushing and pushing and growing, period. That's the way it's going to be. And now let's make sure we have a plan for the recession. Got it? That's the language. It's not, oh, Eric, we got a plan for recession. I heard you say that. Yeah, you heard me say that in the recession webinar, not in the planning to crush it webinar meeting. We're going to plan for grow, grow, grow. Then we're going to go on the side and say, okay, what do we do if we're screwed? And we're going to do that part. But we need to be building for this. We're trying to crush it here and not just prevent failure. So we want to grow these triggers. And I still believe we should be pushing 20%-ish growth. It's very tough for me to go off that unless you're in a really challenged industry, in which case we're pushing it to pivot and probably batten down the hatches for a little bit. And then you're going to have your finance team. So I got somebody like Steve. So you need to have people around you that are not me. I'm just going to say that. People who are numbers based, who say, yeah, I know that you don't want to do this. I know that. I know. Great. We're doing it. Here's the date. How do you want to do it? You need people around you to hold you accountable to difficult decisions, or you're not going to be able to do it.
I'll interrupt for 1 second. So I'm working with a client now, a software company, and they have about $300,000 a month in expenses. And I'm working with them to plan to get it down to 200,000 as a contingency plan. So 50% drop in their expenses, operating and people. And, obviously we don't want to do that, but we're working on the plan of what all those steps are, in case things get really rough. And we might not hit that level, but we'll have a plan for it. And, again, no one that owns that company really wants to deal with that, but that's part of my role to do that and make that happen.
Yeah, agreed. And I actually know who that is. That company ran the playbook perfectly. They researched their entire industry, figured out where they think they're going to end up in all of this, and then built their plan based on that. That was quite impressive. So get your finance team to hold you accountable to the triggers, because people like us generally aren't good at this. It's because it's terrible stuff. It's very, very challenging. If you do all the stuff on those slides, you are now covered for the bad, and you're really covered, equally as importantly, to crush it. Our clients right now are still living in the crush it world, even though they may be down. And even industries that are way down, we've at least got them insulated financially. Okay, so you owe it to yourself to do this planning. The recession we can't control. We can control how we navigate through it, and we can also control how we come out of it. Okay, you've already seen this. So I'm gonna ask you if you have any questions. Before I do that, once again, if you know us well, this is not BS. We will go through your P&L with you line by line at no cost. We will help you to do it. You can work with our finance team. We will make sure we do our part to help you out. We all want to thrive during this time period and make sure we're covered. Does anybody have any questions, feedback, or comments, or shared experiences for the group before we wrap up?
Eric, in your experience working with companies,
Yeah.
when you go through this, this kind of an exercise that plans on declines, and you're working with people that by nature are sales-driven optimists, how does it impact them after the fact, after you finish this exercise?
So that's a great question. And I know you, Joe. So I'm thinking about all the people that you're thinking about as you say this. So one, I am a salesperson by definition. So I try and make sure that I tell them this is a pragmatic exercise. I am a very straight shooter. So I tell them, look, we want to make sure we insulate the company. It's the senior leadership team's job to protect the company, period. End of story. It doesn't matter what seat you sit in. So I make sure they're very clear that our goal is to crush the business. That's our goal. Crush the business, grow, grow, grow. But our goal is also to survive and thrive. So I do this exercise with them. They say, yeah, well, that could happen. And they look at it, they're like, oh yeah, we're screwed and all that kind of stuff. And I hear that kind of comment and I just say, no, you're protected. You're good to go. Now go out and do all this. So, do they like it? No. I mean, this is not the giving out candy bars and Halloween type fun stuff. This is challenging stuff. So they don't love it, but I think ultimately, I hope, I've never had anything but overall positive meetings with this. They generally leave the session and say, we're protected and now we're going to crush it. And what they're really doing, and if I'm really open with the team, which some teams I can do this, we're really trying to make sure we protect our own livelihood at the same time as much as possible. So they generally understand that by protecting the business, they're protecting themselves. So, I can't make things that aren't positive into positives, but we can make sure that we can thrive while we're doing it. So as a whole, relatively positive.
I have a question as well. This is Ramesh.
Hi, Ramesh.
Hi, Eric. Thank you for sharing some of your thoughts. Two questions, and maybe Steve, you can also respond to it. First is, what are the sources of getting a little bit more capital, let's say 200-300K kind of capital, to give us that 24-month runway? And secondly, while we are growing, we are actually anticipating 100% growth rate over the next 12 months. And we are seeing that in our sales pipeline even now. In order to plan for that scenario of not growth and costs that are rising, what are some of the top 3 items you've seen to shave 15% of your cost structure?
Steve, I'll let you answer both those questions.
Yeah. So on the financing part of it, one area would be to look at your accounts receivable line of credit if you have one, and see if there's capacity, if you're growing like that, and talk to your bank about sort of making an accordion feature to your credit line. So as your accounts receivable is going up, they'll give you more credit on your credit line. And I think that's the typical way for a growth company to grow. Another idea is if you have investors or owners that are willing to put up some money for some equity, get money that way. Another idea is to look at term debt. So ask your bank if they'll give you a 2 or 3 year loan that just paid back as P&I. There's also SBA programs like that you can tandem with your bank, so it's less risk to your bank. There's also companies called venture debt companies that'll give money to a growing company. They may take a little bit of equity in the form of a warrant, but they'll give you good amounts of cash with very low covenants. So there's at least 4 ways I can think of off the top of my head to get some extra money into your business.
How about that's awesome, Steve. And you can email us and we will help you with our bank resources if you need help with it. But Steve just nailed the big ones. Ramesh, what's your business again, to give Steve context on the cost savings part?
Sure. So we are a SaaS platform in healthcare space, and helping employers of certain size to reduce their costs and risks. So that's what we provide to them. We help them basically shave costs in healthcare. And our business is predominantly people cost. Whether that's software team developers, building our software data management team, which is offshore. So that's a lower cost burden. And then the team over here, which is sales, marketing, and product innovation. Then we have all these other tools, technology, this and that. And then the last big bit is marketing, doing a bit of advertising, and sales related activities, going to conferences and stuff like that. So that's the third big bucket of costs.
So Steve, where do you start in shaving expenses for both Ramesh and any client companies that he's got?
Yeah, I mean, I think you have to start with the people and the outsourced engineers, because as you mentioned, those are your biggest costs. So are there ways to delay the hiring of people that you may have budgeted for next year without too drastically affecting your growth? Are there ways I mentioned earlier of getting 2 people's down to 1 person doing a particular function, where you might have been like happy to hire 2 marketing people, maybe only have 1. If you have sales performers who aren't doing particularly well, maybe you let them go and put more, maybe build up the incentive plan for the people that remain. That's another way you can cut some costs, is usually inefficiencies in sales and marketing that, can be realized. It could be your advertising programs. Really look at the ROI and what you're spending is another area that I've seen cost savings. If you use an Amazon, there's probably ways to cut your server spend by working with them.
I didn't think about that. It's a good idea. Yeah.
So there's a lot of different areas that I could point to. And I think what Eric mentioned earlier, just kind of go through your P&L line by line. If there's any contracts for equipment, which you might not have a lot of, or cars or anything like that, anything you can have expire and then reduce it with the next version of what you're buying. Is there other areas to look at?
So
You
Steve,
could also negotiate with your bank too and ask for a bigger or shorter spread and a little less interest expense is another potential idea.
Just want to call out that we will actually be following up for everyone who signed up for this with a guide to analyzing your P&L. So that line by line, we're going to have some
Kristen,
that.
now you know the actual voice of the entrepreneur is. There you go. Thank you, Kristen. So I want to say one last thing, because it's a good way to end this. I'm respectful of your time. Thankful to everybody that's hung in for a full hour here. Some of you went to Nerve, the conference, and you met Mark Moses. Mark and I have been close forever. So I was his third client, and I worked with him for years in one of my businesses, and we're still very, very close. And he used to, and I could probably tell you everything that Mark has ever got to say, because we are that close. But he used to have this fantastic way of looking at cost cutting. He was brutal. Okay, if you met Mark, you'd probably see. I mean, he got very successful for a lot of reasons. But he would say, when I first started having trouble with one of my companies about 15 years ago, he'd say, "Okay, Eric, I want you to work through your P&L. I want you to cut your expenses, and I want you to go through it and line by line and come back with your round of cost cuts, and then and we're going to go through it." So I did that. I brought all the stuff to him, and he said, "Okay, I got it. You're down significantly in your expenses. Our profitability is heading back up again. I like it. It's good. Now for our next call, I want you to go and I want you to cut the expenses in your business. I want you to cut every single expense you can." I'm like, "Mark, I just did that." He's like, "I know you did. I want you to go cut every expense you possibly can. I'll talk to you in 2 weeks. Just cut every single thing you can. I know you got it." So I come back, I do it. I'm down to I'm in a pretty good profitability at this point. My business has totally changed. But, it's changed a lot for where I was, but I'm profitable. I'm living in reality. He says, "Okay." I mean, he went through every single line. He's like, "That's great work. Now I want you to go. I want you to cut every single expense. I'm going to talk to you again in 2 weeks." And he says, "Your first round was that was like stuff that you felt comfortable with." He's like, "That's not what I'm shooting for. I'm shooting for success here. I'm shooting for profitability." He's like, "Your second round was painful, but that's not even enough. When you're trying to be successful in business and you're trying to live through a difficult time, you got to cut to the bone and you got to make sure your business is protected." And I never forgot that lesson. So I'm going to end on that note, because this is our preparation webinar. Because if you guys work with me, you know that after I leave this webinar and after we do all this stuff, all we care about now is what? Growing. Fun stuff. But protect first. Now we're going to grow. I'm always humbled to be able to work with all of you. I appreciate you coming. We got a recording. Kristen will follow up with you. You got an email for Steve. We're very, very grateful. We're all in this together, truly. I'm in a quarterly tomorrow dealing with the same issues. I'm so grateful to be with you all. See you, everybody.
Thanks, Eric.
Thanks so much.
Thanks,
Thank you,
everybody.
guys. Thanks, Eric.